Good morning, traders. Paul here with GammaEdge. Today is the 6th of June, Monday. Let's get started. Please pause your viewers. Give us a good read. It's important to you. It's important to us. We want to make sure that everyone's on the same page. Starting with the market model, the ARCX cumulative tick is the one we are using here. First thing is we didn't get the continuation on Friday that we were expecting. You can see we pulled back. A number of things went on Friday, profit taking, bouncing against the 4100 SPX level, etc. Over the weekend, we talked in some detail about what this means and how you can play that. I've put these balloons on here. Broader picture, we have slopes that are upward on the historical moving averages, and that is bullish. What we're looking for here is we want to remain above this, and while that condition exists, we'll eventually get that ribbon inversion that we talked about this weekend, and that's a long-term bull signal. Failure to do that, if we get the white CT moving below the ribbon, we'll start pulling these downward, and that'll be a failure of the up signal and will be an indication actually to take a look at the downside. The index condition day over day for the SPX, the SPY, the Qs, and IWM. Friday saw a significant amount of net negative gamma being added. This is short-term downside protection, as well as calls coming off. Now, part of this is due to the expiry, but when we see a significant increase on the put side, increase of anything actually, we know that despite the OPEX, people are serious and are doing what is being indicated. So across the board, increase on the net negative gamma, decrease on the net positive gamma for the SPX, the SPY, the Qs, and the IWM. When we take a look at the short-term expiries, these are the 0 DTEs for today. I've highlighted the area where we are sitting. This little black dot that is sitting here is our current price, and you can see for the most part we're very, very close to these transition zones that I've called out here. Why that's important is that while we're in this area, we do not expect a lot of dealer pressure. Just be aware of that we could move back and forth fairly easily. Whatever the market does on the 0 DTE may push us around. Taking a look at the history, we are seeing some bullishness develop within the complex. Here on the SPY, we actually have positive gamma. This is short-term gamma due to calls actually increasing, and the zeros increasing. When we see that, we have a short-term perspective that calls are being added, and that's always good. The addition of calls into a complex generally will pull us upward, but we'll just have to wait and see what happens here. Contrasting that, we actually have net negative gamma coming down. When we have that, we've either monetized at the old level or we're adding very, very close to spot price here. So any move up in the Qs would be taken as an advantage, and that monetization can actually be downward pressure. I will note we are incredibly close to this 300 level, which is where POI, the put open interest dominance, is sitting, as well as the minus GEX level. So we want to pay attention to that. A loss of 300, for instance, in the Qs would be a very, very bad thing, because we would most likely push downward. On IWM, we are seeing positive GEX come up. We're also seeing the 0 come up. When that happens, again, just like up here in the SPY, we're seeing calls being added. People are looking to take advantage of small caps and advance in small caps. We are still holding that minus GEX level down here. It is not advancing up, so we're not seeing a lot of puts being added below that, but note any downward move here, and these out-of-the-money puts will, their deltas will start increasing, and people are basically taking advantage of short-term cheap downside protection here. Taking a look at the SPX, what we call the true gamma and delta zeros, the key areas highlighted here in yellow. You can see where we finish to the downside. That 40-60 zone is going to be very, very important. Below that, we open up the door down to where we have COI and POI for the SPX at 4,000. 4,200 is the upside bogey. This has been very, very stable for actually probably more than a week and a half or so. Very key for us to watch that. So a break above 41.67, which is possible given the overnight futures action, could actually see us grind upwards and move up into that 4200 level. I do note that we do have the JPM end of month long put expiry up here at 42.85. That is seriously in the money with 44,100 contracts right now. That is a headwind, and that will push against us as we start moving up. Just be aware of that. When we take a look at the ES, I like the ES because it's a single expiry. It removes some of the variance that we get due to multiple expiries in the gamma that's associated with them. So when you see a single expiry in the ES, it's also a good confirmation or not of what's going on. So a couple key things that are of interest to us. Here's that 4100 level again to the downside. When we see it in the ES, we've just got a lot of stuff stacking up at 4100. 4177 to the upside, you can see plus trans in here at 4185. So above 4185 upward is all positive calls, positive gamma. You can see down here below that 4005, that's where in the SPX we have all of that dominance at 4000, so we want to pay attention to that. I think really the line in the sand, the absolute line in the sand is the 4000 level in the SPX and the ES, but this 4100 level comparatively to the SPX and to the ES are incredibly important, so take a watch of that. Also watching the VIX down here, you can see it's fairly noisy from Friday. Overnight action saw a net decrease. We want to see it close below 25, go down towards 24, 23, 22, etc. As we grind into next week. We'll just have to wait and see what happens here. The 0 DTE, a lot of information here. Your circle 1 here shows this is the single expiry for today. Net negative gamma, very, very light level though. The dominant expiry for today on the call side is up here at 42.50. Not seeing a lot of pressure pushing us there. You can see the deltas are very noisy across the 0 DTE structure. Not expecting a lot of movement on the 0 DTE, although intraday players on the DTE could push us around. This blue box area is our transition zone. You can see we're back and forth, a lot of places to hide in here. The circle 4 is definitely that's at 4200 level, definitely could push above that. If we do push above that, look for a gradual melt up into that 4230, 4250 area. I don't think we're going to get up much higher in that if we do break the 4200. Note this 4150 level, very dominant. And then to the downside, the 4050 loosely corresponding to that 4067 that I just talked about on the overall structure. So if we do break down and test some of these areas, I do expect the 4050, 4060, 4067 area to hold. If we lose this 4050 on the 0 DTE, you can see that opens up the door to 4,000. On the combo, which is the AM and the PM, pretty important here. We are not getting out of this negative gamma environment. What that typically means is expect higher volatility, etc. So just keep an eye on this. We are not reducing this. And in fact, the wing charts show that we're still quite negative across the major complexes here. Although the liquidity stocks, as many of you have noted within the Discord, are still very, very net gamma positive. So that's an interesting change of events there. Transition areas in the blue box. You can see these delta levels are very, very significant, right? And line in the sand is 4,000. I absolutely don't see us going below that. I do think 4,200 is possible. I think we can grind up into that area. We've got a large delta level up there. It's all negative above us, so we need to see puts up here if we're going to move up aggressively. We need to see puts up here, or excuse me, calls. Blew that. Yeah, we want to see calls going in up here. We're dominated still on the delta side, negative delta side, which is due to puts, even though we do have positive short-term call gamma up sitting up here. A couple key things to watch. This was 18% on Friday. It's gone back up to 21%. This is the expiry between now and the monthly. This is going to continue to grow. This is a big number. Just keep watching these. So 21.5, this is rounded down to 0, so you have 27 in here. We're almost at 30% right now, so keep an eye on that as we go higher and higher. Removal of a large amount of the SPX on an expiry is significant. So 30% looking plus or minus right now. 30% of a $6 trillion asset or $5.5 trillion asset is a good amount to shift hands between now and then, and so pay attention. Expiration. Relatively weak. You can see we're relatively flat. We are seeing some growth in the monthly. We're also seeing some growth in the negative gamma on the end of month. These will have a major impact as we approach them. The SPX structure, we're at the base of this transition zone. We do have a little bit still up there, sitting up there. Here are the JPM long puts here at 42.85. We're seeing a net reduction in the 4,200 as calls were monetized, and we moved down a little bit, of course, but this is a fairly significant line. That 4,200 is the next upside pin. So if we can get over 4140 consistently, and I think the ES is going to open above that, I think the 4,200 does become real. So what's the summary for today? We are improving overall in the bull setups. We're sitting clearly within that 0 range. It's a low pressure environment. I think if we can get outside of this transition zone, that'll potentially give us some upside move up to 4,200. We'll just want to watch that. The market model, you should be reviewing long-term positions. That we are above the CT, or excuse me, the CT is above the ribbon. That is a improving condition, and be on the watch for going long. Longer term, improving for the bulls. Shorter term, breadth, I didn't show it today, but breadth is still very, very poor. This is cautionary. And as I said, because we're above the ribbon, we want to be looking for those long positions. The wing charts from Friday are still quite bearish with the addition of net negative gamma and reduction of net positive gamma. Want to watch that. This 4100 area, I absolutely don't want to see us go below that. We have the true gamma 0 and the true delta 0s from the different complexes are sitting right there at this Livermore level. It's like stacked. If we break 4100, I think it opens the door for some downside retests. I do think the downside is well protected. I do expect some charm flows into OPEX, which will have us grind higher. If we can get above 4,200, then that'll all start pushing against that 42.85 boat anchor as the dealers continually adjust their deltas and start, sell those their adjustments for those long puts. So that's it for today. If you like today's content, come and join us at GammaEdge.us. That'll take you to a Discord sign-up page. 14-day free trial. All the tools turned on. Lots to digest when you get there. Great group of traders. Everybody's willing to help each other. It's actually quite a lot of fun. We had a great open mic last night, so I urge you to come and kick the tires. Follow us on Twitter, please. GammaEdges with an S. And then here on YouTube, if you like today's content, smash that like button. Smash it hard. And then, of course, subscribe to us so that you can get notified the next time we post something. So with that, I'll see you in the Discord. Make it a great week, and thanks for your time, everyone.